Hey friends, the DeFi Doctor here. I'm the head of education at Decentralized Masters, where we break down crypto so you don't get wrecked. Today we're diving into the wild, chaotic, and occasionally brain-melting world of crypto TikTok advice. Let's be real, TikTok is full of gurus, experts, and influencers who promise that you will turn $10 into a Lambo next week. It is like walking through a financial minefield. One wrong move and boom, your portfolio is gone. So today, we are going to react to some of the worst crypto advice floating around, break down why it is terrible, and of course, learn how to actually not lose money in the space. Put all your money into this one coin. It's going to 100x. Ah yes, the classic trust me bro investment strategy. This is hands down one of the most dangerous pieces of advice on TikTok. And yet, it is everywhere. Someone in sunglasses, probably standing next to a rented sports car, tells you that some random meme coin is about to explode and that you need to put everything in it. If you have been in crypto for even 5 minutes, you know that 99% of these so-called 100x coins go to zero. Sure, there are a few lucky plays here and there, but betting your entire stack on a single project is gambling, not investing. Even seasoned traders do not throw all their money into one asset because diversification is key. Here's my rule. If a guy on TikTok tells you to sell everything and buy a coin you have never heard of, assume he bought it cheap and is waiting for suckers like you to pump his bags. Just buy Bitcoin at any price. It always goes up. Okay, this one is tricky because Bitcoin is a solid investment, but the problem is that at any price part. Yes, Bitcoin has historically gone up over time, but that does not mean you should FOMO in without thinking. Imagine if you bought Bitcoin at the top of 2021 at 69,000 and then watched it crash down to $16,000. That would not feel great, would it? Timing matters. Instead of blindly buying when the hype is at its peak, use strategies like dollar cost averaging or DCA. DCA means buying small amounts over time, so you're not gambling on a single price point. Long term, this is how smart investors build wealth instead of getting wrecked on hype cycles. Leverage trading is the fastest way to get rich in crypto. Yes, leverage trading can make you a lot of money, but it can also wipe out your entire account in minutes. Leverage is when you borrow money to trade, magnifying both your gains and your losses. It sounds great in theory, but what they do not tell you is that one wrong move and your position gets liquidated, meaning you lose everything. The market does not care about your feelings. If you are new to crypto, leverage trading is like playing with fire while blindfolded. You might get lucky once or twice, but eventually it will burn you. My advice, master spot trading first before even thinking about leveraging. And when you do use it, keep it low. I have seen people get liquidated in seconds because they thought 50x leverage was a great idea. It is not. Crypto is dead. Sell everything now. Yeah, every bear market we hear this. Crypto's over. Pack it up. It is never coming back. And yet here we are. If you had listened to this advice in 2018, you would have missed out on Bitcoin going from $3,000 to $69,000. If you had panic sold in 2022, you would have missed out the entire next bull run. Crypto is cyclical. There are bull markets and bear markets, and knowing this is half the battle. Instead of reacting emotionally, learn to zoom out. Long-term investors win because they do not sell at the bottom when everyone is scared. They hold strong, accumulate during the dips, and take profits when the market is overheated. This coin is backed by celebrity. It must be legal. Listen, if your investment strategy is based on what a rapper, an actor, or some random influencer is shilling, you are already in trouble. We have seen this play out so many times. Remember when Floyd Mayweather, Kim Kardashian, and a bunch of influencers were promoting Ethereum Max? Yeah, that turned out to be a total scam. Celebrities are not financial advisors. They are paid to promote things, and most of the time, they don't even understand what they're endorsing. Before you invest in anything, do your own research, read the white paper, check out the team, and actually understand the project instead of blindly following a famous person who probably got a fat paycheck to tell you that it is great. The best way to protect yourself from bad advice is to educate yourself. If someone makes a claim that sounds too good to be true, fact check it. Look at multiple sources, not just one random TikTok. Follow real crypto analysts and investors who have been in the game for years, not just some guy who appeared out of nowhere last week. If someone is telling you to do something without explaining why, that is a big, huge red flag. Good financial advice is backed by logic, data, and experience, not hype and emojis. Most importantly, learn from mistakes, both your own and others. Crypto is an amazing space with huge opportunities, but there is also a ton of bad advice out there. If you want to survive and actually thrive, you need to think critically, manage risks, and never trust TikTok and Instagram blindly. Thanks for joining another decentralized crypto class. If you enjoyed this breakdown, hit like, subscribe, and let me know in the comments below, what is the worst crypto advice you have ever seen? Let's laugh about it all together. Stay sharp, my friends, stay decentralized, and I'll see you in the next one.